The Mayberry Investments Limited Virtual Investor Forum has been the standard for investor education in Jamaica for decades, where top financial minds provide comprehensive insight into the market and ideal investment strategies and opportunities for our clients. Celebrating 37 years of excellence in investment banking. The Mayberry Virtual Investor Forum, investing in Jamaica.
Good evening, ladies and gentlemen. Welcome back to our Virtual Investor Forum. I'm your host, Dan Theok, Senior Vice President of Investment Banking here at Mayberry Investments Limited. Joining us today, thank you. Joining us today is none other than Mr. Kadeen Mears, CEO of Dolla Financial Services Limited, in a highly anticipated forum. Kadeen will be giving us an investor update on the success of the company and, of course, how they've done post-IPO. Before we get started, we know our viewers can't wait to hear from the man himself, so we encourage you to post your questions in the chat and be sure to like, share, and subscribe to our YouTube channel for more insights on your favorite companies listed on the GSE. Now let's talk Dolla Financial Services. Dolla Financial Services Limited was incorporated on October 14, 2009. The company is a subsidiary of First Rock Private Equity Limited, which owns 60% of Dolla's shares post-IPO. Dolla's initial objective was to provide a full suite of financial services to the public. The company was organized into three divisions, namely the Loan Financing Division, the Remittance and Bill Payments Division, and previously the Cambio Division. Dolla Financial Services foresees significant growth in its loan portfolio and throughout the Caribbean. The company is now listed on the GSE after a very successful listing in June of this year. We expect to see lots of growth for the company, so a quick reminder that if you're looking for sound advice from experts who can assist you in expanding your portfolio or embark on your very first investment journey, Mayberry Investments should be your first and only choice. Follow us on social media or visit our website at www.mayberryinv.com to learn more. Now let's introduce you to our guest for this evening. Mr. Kadeen Mears serves as CEO of Dolla Financial Services Limited. He's responsible for the execution of Dolla's business strategy, operating guidelines, and internal controls. Kadeen has a proven track record of performance in the area of entrepreneurship, change management, organizational restructuring, credit and risk administration, process efficiency, and human resource development. He also serves as director for Dolla Financials in Guyana, a subsidiary of Dolla Financial Jamaica. Lastly, Kadeen is the founder of Dequity Capital Management, an associate shareholder of Dolla Financials, owning 20%. So folks, join me to welcome Mr. Kadeen Mears to our forum once again. Welcome, Kadeen. How are you doing?
Not doing bad at all. Feels good to be back, Dan.
Great to have you back. Great to have you back, and especially after that spectacular IPO where you guys were successful in attracting over $5 billion in investors, despite only looking to raise $500 million. So it was crazy oversubscribed. Congratulations.
Thanks a lot, Dan.
And I wish to note that since IPO, that stock's traded up solidly to about $3.50. We've seen almost $1 billion worth of shares trading on the market post-IPO. So folks, this isn't just IPO hype. Stock's been trading with relatively good liquidity at $3 and higher. So that's impressive. Congratulations again.
Thanks.
Okay, before we jump into the Q&A, I want to do a quick analysis of the company just to look at results. And I think we have the 6-month results to June 2022, guys. So if y'all can pop that up, I'd like to talk a little bit about that to give the audience some insight. So first slide, I want to talk a little bit about the financial performance. And here we're looking at the half-year results to June 2022, and what's impressive is not just the growth in total assets, which are up by over 100%, and the growth in the profitability, which is up by over 400% to $119 million. But when you look at the trailing earnings of the business, we can see that that's $227 million. So 12-month trailing earnings, $227 million, over 143% growth. We see their loan book growing substantially, total assets up to $1.19 billion at the time. Net profit for the half year, $119 million, which is, substantial growth over the prior year, and the business just looks like it's, set to take off. And this is before, I believe they've had a full chance to deploy the proceeds that they received out of the IPO, and we'll talk a little bit about that.
Yes.
And future growth prospects for the business. Stock is trading as at yesterday at $3.51. I'm sure it closed a little bit higher today.
It closed at 354.
354 today?
Yeah.
Yep. So it's still climbing, And it's trading, a little bit rich at a 39 times PE ratio from a trailing earnings perspective, but it's clear that the market is thinking of Dolla on a forward basis. And I like to think of, reasonable average PE for the market at 20 times. And so if you look at the total shares outstanding, about $2.5 billion, that's telling me, Kadeen, that the market's expecting you to make $400 million profit per year going forward to justify your stock price. So you got a little bit of work to do.
Yeah, I got some work to do. We have some time, though.
You have lots of time.
Yeah.
We'll be talking about it. We'll be getting into it. Next slide, I want to just show you guys a little bit about the historical performance of the business over the last 5 years. And again, you can just see how, business is just blown up, right? Coming from almost zero to $167 million for the full financial year in profit. And again, on the 12-month trailing earnings, when you walk that forward, this is to the financial year in December, when you walk that forward to the June 2022 12-month trailing earnings, that $167 million would become $227 million. Next slide. So again, you can see the phenomenal growth in the business. Quarter by quarter, last year what the quarters were, and then the last 2 quarters, he's doing $60 million per quarter in the last 2 quarters, and I expect that to get to $100 million a quarter to justify the $400 million earnings that the market is basically expecting. So a little bit more work to do.
Yeah.
Next slide shows how the stock has traded since IPO. $1, boom, up to a high of about $3.50. It's flattened out over $3. Traded with good volume, guys. Over, certainly over $180 million 2 months ago, $150 million in the month of August, and still trading with good volume even in September at over $3. So stock's still in good demand. So junior market company, guys, trading, over $900 million in 3 months. When you back out the crazy first month of trading, maybe $600 million, still trading almost $200 million worth of stocks per month, which is good liquidity, great liquidity for a junior market company. In fact, they're obviously punching above their weight. And I think that's the last slide that we have there. So with that, I think, Kadeen, I'd like to jump straight into a couple of questions. First one for me is, truth or rumor, I hear you guys are trying to raise over $1 billion to try to grow your loan book.
Well, that's true. I mean, the notice was posted on the Jamaica Stock Exchange website. So basically, we got our no objection from the FSC for us to go ahead and do a private placement or exempt distribution. Yep. So basically, we're looking to raise $1 billion with the possibility to upsize to $1.5 billion.
Excellent. Put me down for $100 million. I know you're good for it. And so the idea is to raise those funds and then use that to on-lend and blow up your business.
Correct. So definitely it would be to refinance some existing debt that we have, as well as look at existing opportunities for acquisitions, one. Yep. And secondly, organic growth, I literally just came back from Bahamas. Bahamas, nice. We're in Bahamas with my director, Chris Young. We're in Turks and Caicos. We're visiting different markets. We're speaking to people operating in those markets to see what the climate is like for our business. We've also, engaged legal professionals to just let us know what the landscape is like legally with legislations for money lending. What we do is we look at, countries that have a high growth rate and serious potential. So we're definitely looking at some countries right now that have serious potential. As soon as those become material, then we'll definitely announce that as well.
Good deal. I want to give a shout out to, you mentioned Chris Young, and we can't not mention Ryan Reed. There's a great team in the group. I'm going to call it the First Rock Private Equity Group. Yeah. Ryan himself, Chris, and you're obviously a part of the team. And I really have faith that you guys are going to do a lot. And I'm going to declare interest. We're obviously collaborating and trying to assist you guys where we can. But I have great faith in the business and where it's headed to. Okay, let's jump into the formal questions we have here. How would the Bank of Jamaica's changes in regulations for microlenders affect the company in your view?
Well, I mean, firstly, I'd like to say that, the Bank of Jamaica wrote to us and to say that they have no objection with us continuing as a money lender. So it's just a matter of time before, we're issued a money lending license. That's the first thing. In terms of just how we anticipate that the microfinance industry will be, obviously there'll be consolidation, there'll be sellouts.
Yep.
And, as a money lender and one that wishes to grow strategically through acquisitions, we want to ensure that we have liquidity so that when the opportunity comes, we can cherry pick some good loan portfolios to acquire.
Good deal. So with that $1 billion you're raising and your debt book already getting past $1 billion, $2 billion, I think it's safe to say this would be your next goal in terms of growing your loan book?
The upsize is up to 1.5 billion.
Good deal.
Definitely, when we go to raise money, we go to raise money.
Yep.
So we'll be raising that 1.5 billion. And when we raise that, obviously that will double our loan portfolio, double our net income. So we're really looking forward to putting in the work so that our shareholders can be happy.
Good deal. So when you finish this raise in about 4 to 6 weeks' time, I mean, what's a reasonable time in your view to prudently be able to disperse that $1.5 billion? Is that something you can do over 3-4 months? You think?
It's always good to check the track record.
Yep.
When we did the IPO, the net proceeds that came to the company was about 230 million net of expenses. And that was deployed in 1 month, right? And that was done with, just using, our current resources. We've built out our team, we've acquired new talent, we've stepped up our marketing. So what you find now is that the demand for loans has more than doubled or tripled. People who didn't know Dolla before know Dolla now to come to Dolla for a loan. So what you find is if we get $1 billion, it's easy for us to unlend 300 million per month. So by the end of the year, all of that money will be on the road. Microfinance or the lending business is definitely a business where you constantly have to raise funds once there's a demand. So we're anticipating that by the end of the year, we'll be able to deploy that capital.
Good deal. So that's good to know. So despite all the competition, all the other folks out there, you still have a good pipeline, good distribution channels to be able to disperse those loans.
Yeah, I mean, so people always ask, how are we able to grow like this with the competition that exists? And the truth is that, Dolla Financial has been run by entrepreneurs. The rest of businesses are run by businessmen.
Yep.
Businessmen find a good business model and they stick to it. Entrepreneurs, what we do is we're running a business and we're finding new ways to scale a business, new innovations, and we're constantly, brainstorming new ideas to scale the business. I think that's our significant strength that we have.
Got it. Okay, second question I have here. Formally, Gary, I'll be coming to you in a minute for the next question. Why was Guyana chosen as the ideal location for expansion outside of Jamaica? And are there plans to expand to other Caribbean territories? So you mentioned the other ones. Tell us about Guyana.
Guyana, I think that originally the plan was to stay within CARICOM because it creates less barrier to entry, based on, the CARICOM treaty and all of that. So we focus on CARICOM countries that are easier to enter, easier to do business. I spent a lot of time in Haiti before I went to Guyana. The economy, it wasn't what we wanted to work with, for want of a better way, So spent a lot of time in Haiti. What we target is emerging economies. Guyana, we knew that at the time they didn't find as much oil, but we put a bet on it that they would have found the oil. And what the oil would do was create a boom for every other industry. So we kind of targeted them, worked on them, and when they blew up, we would have already been there compared to everybody else who tried to go there post, finding oil.
Right.
So that was kind of like our strategy for growth.
And how's that experience been? So you've been there on the ground for more than 2 years now. Tell us about the last 6 months in particular. How are you feeling about the growth in Guyana and the potential?
So Guyana accounts for about 9 to 10% of the total loan portfolio. In terms of, I think year to date we're doing about 17 million in profit. We're basically the only microfinance company there. The rest of companies are more like NGOs, more like government funded. So their way of doing business is a lot different from ours. So we're really the only private lenders there. We literally have people lining up, literally,
right.
And that gives us an opportunity to cherry pick loans. So what we do is we focus on different industries, keep it diversified. Construction boom is happening. Construction, you have the oil boom. They're definitely heavily agriculture based. So a lot of companies are expanding now, and we're actually looking at a second location in Guyana now, a place called Berbice. Next time you're in Guyana, I'll take you there.
Yep.
But
how about I take you to Guyana?
All right, let's do that. Yeah, so definitely looking for more expansion. We've grown exponentially in Guyana. I mean, we got to 100 million by the end of last year, and the demand is there. The only thing that stops us from growing is that we need to tap into new capital so that we can give Guyana more money so that they can continue to lend.
Got it. Gary Peart, what say you, sir? First question from you today.
Hey, good afternoon, Kadeem. Good afternoon.
How you doing?
My question is really on the bad debt side. So what has happened is that Dolla kind of benefited during COVID because most of the other microfinance companies were not aggressively expanding their portfolio and trying to manage what they have. And so with aggressive growth, you have a lag effect on the bad debt side. What has been the experience so far, and what is your strategy to try and minimize bad debts?
All right, so in terms of bad debt, during COVID, actually, we've managed over the years to stay single digit when it comes to bad debt. During COVID, we went as high as about 15%. And I mean, we went into a panic zone during COVID. The country would open and close. You put in a strategy, and then you can't rely on that strategy. And what we realized when we really sat down as a team, and our board of directors, all of us decided that we have to diversify and mitigate against some of the risk on our unsecured loans. So strategically, if you look at our loan book compared to all of the other competitors, our loan book is probably 73% secured. And this is not secured by equipment or a TV. This is secured by real estate or a motor vehicle, right? So it's with assets that are loan to value. There's a lot of equity, in these assets. So that's kind of been our strength over time in terms of managing the delinquency. Another strategy that we use, and I'll talk about the strategies publicly because I want to help the competitors. You can't operate alone, right?
Yep, I agree.
Is that, a lot of the competitors focus on a lot of consumer loans. They want to just go inside of a business place and give a salary deduction loan, while kind of closing the doors on entrepreneurs. So we've opened the doors to entrepreneurs. We've seen entrepreneurs grow, scale their business, come back, and get to the stage where, commercial banks now accept them.
Right.
So that's kind of like our accomplishment, things that we celebrate internally.
Excellent. I like that strategy. Third question formally that I have here is you started out supplying loans to informal proprietors who didn't even have accounting records, such as market vendors. Do you still focus on that group, and how have you grown since?
So definitely we do, not because we're growing means that we forget the little man. They're definitely a part of the family. They've put us where we are, and we still believe that giving access to credit to micro businesses, they're the backbone of every economy. We still do give financing to these businesses using different methods to evaluate during our adjudication process, simple things as, the 5 C's of credit, which includes character. A lot of lenders now don't take character into consideration. But the fact is that if you know that this person has been selling at this location for the last 20 years and that person has sent 3 kids through college, this person is of good character and this person can come to Dolla Financial and the people in the community can vouch for them, then definitely we rely on that more than a cash flow statement, you know.
Got it.
So those are methods of lending that we still rely on. Our loans officers are very prudent, they understand the business. We have a very low turnover. So what you find is that our team that has been with us, they've been with us from inception. And once they come on board, they stay on board.
Excellent, excellent. So tell me 2 more C's of lending. You mentioned collateral. Character.
Putting me on the spot.
How about cash flow? I wonder. Yeah. I don't know. What do I know? Tell me now. Moving on to my 4th question. How many locations do you guys currently have, and what have you done post IPO? Have you opened up anything new?
I mean, prior to the IPO, we've seen on Twitter where some of our shareholders are saying, you know, we should open a branch in Portmore. They were giving us, based on their experience, some places that had heavy foot traffic. And we took the advice. We explored Portmore, which was a great opportunity, and we actually opened a location in Portmore.
Great. So how many do you have in total now?
We have 9 locations in Jamaica and 1 in Guyana.
Good deal. Excellent. 6th one, how do you plan to navigate the microfinance space with rising interest rates occurring locally and overseas, but mainly locally? Are you concerned about rising interest rates?
No, I think that will actually, you know, work in our favor. And I say that because while commercial banks constantly increase their interest rates, we have already priced our product at a higher premium because we take more risk. So what that allows us to do is stay at our pricing while they have to increase their pricing to facilitate risk that we had already made provisions for.
Got it.
And that will now convince customers will now say, you know what, we'll go to Dolla instead of going to this institution because they'll pay the difference in interest rate because we obviously will, you know, it's easier to get a loan from us.
Right, so the gap is getting smaller, the spread between commercial banks and the rates that you're lending on is getting smaller. Good deal. And what's the average repayment period for business loans that you guys are processing?
Average is 6 months to 12 months.
Okay.
That's our average lifetime for our loan.
Good deal. And then you did speak a little bit about the mix of loans. Could you just, again, so we know you're not like some focused on consumer lending, how would you describe the mix of loans, your portfolio in Jamaica, in terms of, you know,
in terms of industry?
Yeah, industry.
Okay, so in terms of industry, I mean, you know, during COVID taught us a lot. I mean, the board of directors, you know, decided that, you know, no one industry, for example, should have more than a 20% concentration. So we had put in certain policies in place to mitigate risk.
Right.
So what you find is that tourism, BPO, manufacturing, transportation, there is a more, it's spread across more than there was in the beginning. There was probably a heavier concentration in tourism because we were building out from Western Jamaica, and that's heavily tourism. So what we've done is actually change our business model so that we actually have more concentration in different industries.
Good. So terms is one big one, or what about types of loans? So for instance, consumer loans versus car loans versus business loans. How about that mix as well too?
So in terms of, I think one of our bigger products now would have been what we call the One and Ready, which gives you know, operator opportunity to buy a taxi and put it on the road, operate it and pay their loan. That's a big product for us. We have the MediPay, which is basically a product, as it suggests, medical.
Help with medical expenses?
More cosmetic. Medical, like you know, braces. And a lot of other cosmetic stuff that women like to do, you know. So what we've done is we've got very modern with what is happening, and we've really, you know, designed products that really could, that speak into the people. You know, we've recently launched a partnership where we're now financing renewables in the renewable energy space. So it's just to stay diversified and focus on, you know, what's relevant now.
Got it. And what's the staff complement of Dolla Financial looking like these days?
So the funny thing is that, you know, when I started out, you know, I knew everybody's name, and now I have to be, you know, making it a point of my duty to know all of my staff at the pace that we're growing. But we're heavily over 40 which complements Jamaica and Guyana. But we operate very lean.
Okay.
Yeah, in terms of our operation. We have one person that might play more than one role in their position as well. And everybody in the business, not because you're lending, you also understand collections.
Right. Got it. And are there any plans to acquire other players within the microfinance space?
Always. There's always a plan for acquisition. I can see where you're going with this one.
No, it was there. I mean, it's a rumor or truth. You may have put in a bid to acquire a large fish?
Well, I think we're the largest fish right now, have market cap almost $9 billion.
Yes, but maybe by loan book? How about by loan book? I agree. You're definitely the largest market cap in the microfinance space.
But, I mean, it's unfortunate that the news came out how it did.
Yes.
But basically, we have made unofficial offers, well, official offers, non-binding offers. Not offers, but shown interest.
Yes, expression of interest.
Yeah.
Got it.
In not only that company, but also other companies.
And others as well.
Yeah, which we've gotten responses from, and as soon as that materializes, then we can put that out there. But acquisition is a part of the business model, just like opening a branch is, just like how lending a loan is.
Got it.
So once we see that there are players in the market that we think have matured, and we think that the leaders of these companies, they're really looking like they're ready to exit, then we'll definitely be partners for them to help them to exit and help them to continue to grow, what they've established before.
Big or small, right?
Big or small.
I like it. I like the ambitions. Okay, great. So I think by now we should be having quite a few questions there in social media. Gary, just back over to you. Do you have an additional question that you would like to ask of Kadeen?
Yeah, man. I'm more specific. So a rumor has it that he has taken the visa from Access. So is that a sign of what is to come? He's been bouncing around it, but he, as I said, if he's now taking people from Access, I mean, what else is he planning to take?
What I'll say to that is, I can confirm that she has left and she has chosen to come to Dolla. That's no secret.
Okay.
Yeah. So when the time is right, we'll definitely, through the right channel, announce, when she starts, what her position will be, etc. What I'd like to say, as I said before, we have a low turnover.
Right.
And, one of the things that was important to us as partners in the business and directors is, for example, we put in place ESOP, employee share offering program. Nice. Everybody in the team, they take their job seriously because everybody is a shareholder in the company. Right? If you're not a shareholder, no matter your position, that means you don't believe in the company. That's how we say it.
Right.
And it doesn't matter the amount of the volume of shares you own, but it adds that level of unison or synergy amongst the team members to know that we're all working towards a common goal. And it's going to attract people from the outside. It doesn't matter how you want to put it.
I have no doubt, and as a consultant working with you, I would like some ESOP shares myself too. So folks, let me jump over to the questions, and we've answered quite a few, but I still want to acknowledge folks who may have put in questions like Limitless Podcast, who asked how soon will you be able to lend out some of that $1 billion, and you explained already that you can move that very quickly. What percentage of ownership over 50% are you aiming for? And so I don't know if, I didn't want to get into any specific questions about Access Financials, guys. So forgive me, we know unsolicited offer, was put on the table, and they're looking at other businesses, but we didn't want to get into too many things. And there are a lot of questions coming about Access, like will you be attending their AGM? And someone said Marcus James signing in. So funny jokes aside, what's the update on the BOJ microcredit institution approval? So you've made your application. They've given their no objection. And you're just waiting on the process.
Correct.
But you've completed your application, and they've already acknowledged your application and said they have no problem. Phyllis Burgess asks, congrats on the IPO. To what extent does Dolla Financial employ Fintech currently, and are there plans to further explore that avenue for marketing, disbursement, monitoring, and collection of loans? Great question, Philip.
Well, the good thing for us is, I always ask about our growth, how we're able to do it. We have, from the beginning, employed Fintech. So everything for us is cloud-based, for example, from the get-go. So whatever we're going to implement don't exist as yet, because we've already implemented it. We're strictly cloud-based. Even our system that we use.
So folks can make their application online?
Yeah, definitely.
Tell us, what's this website?
Definitely. So you go on dollafinancial.com. You can go and upload your documents, whether it's your payslip, your ID, your KYC. Once you upload that goes straight for adjudication. You can get a response, you get an email. Right up to you, your loan getting approved, you get a text message, your loan has been approved. So we have a really integrated system that we work with.
I like it. Next question comes in from David Rose. As the proclaimed king of microfinance, how do you see the expansion of Dolla? Now, I think you've talked about that a bit.
Yeah, I did.
So, David, I think the King's spoken a lot about it. I don't know if you want to say anything else. He's going to be raising up $1.5 billion.
Yeah.
There's lots of other things you're doing. You're looking at other territories you mentioned. I think you covered that one. Damien Wader, we see M24 Investments advertising on social media. Given the roots of Dolla, is this a play to return to providing full money services to consumers?
No. M24 is a Cambio. So we discontinued money lending. That portfolio was sold to Dolla originally.
Okay.
And basically, Dolla focuses on microfinance and they focus on the Cambio business.
Good. And David's been asking, how's the take-up been for the Portmore branch? How's that been?
It's been good. We're in training mood now with the staff the new staff that are there now. We don't just jump into lending when we get into a new location. The key thing is to get the staff familiar and take our time to grow.
Got it. With the constant talks of recession, how will Dolla insulate itself while expanding?
I think that when I hear about a recession, the fact is that we've survived COVID.
Yeah.
Recession, I don't think it kills people directly.
Right.
A recession doesn't make planes stop flying.
Right.
And a real shutdown. So I think we're pretty prepared for a recession and what might come with it, because we've already implemented strategies from COVID, which we've decided to live by.
Got it. Appreciate that. Dwight Forrest asks, absolutely optimistic about this company's strong portfolio and brilliant leadership equals success. I'm getting in early, so he's just making a comment. Thanks, Dwight. Appreciate that comment. And classy culture, I'm very optimistic about this company, so lots of praises coming in, Mr. King. Is there any timeline you have in mind for the company to reach the $3 billion loan book? So I think based on what you said, it sounds like it's quite imminent.
Yeah, I mean, once we close this bond that was announced that we're pursuing, we hit 2.5 billion loan book. I mean, organically based on our earnings and reinvesting that earnings, then definitely, I mean, 3 billion is not a stretch.
Not a stretch at all. I think you'll be there within the next 6 to 9 months. Will Wynn asks, do you have any agricultural loan products?
So we don't have a direct product for agriculture, but what we do is, in terms of industry, we do have a concentration there, and we do lend to that segment of the market a lot. I mean, I've spoken about it before. We're probably the only company in the past that has taken biological assets as collateral.
Got it.
So, I mean...
So if somebody has some cows or goats and they're well organized...
if you have some red pole cow...
Yeah, you work with them?
Yeah, we work on it.
I got a friend, Kevin. Did you hear that? I got a friend, Kevin. He's got 100 red pole and looking to get 100 more. Needs $14 million. I'll send them right over to you. Serious thing. Kevin, I hope you're watching. Justine Bent, are there any plans to tap into the housing industry? She's saying mortgages.
No, I think this is a mistake that a lot of our competitors have done, where you start to grow and you start to focus on something that's not who you are. There's a lot of customers that come to us. Even today, a customer was referred to me, and a customer called here explaining that they want a certain type of loan, and I said, you need to go to the commercial bank for something like that. That's not our space. Our rates are higher than the commercial. We're not going to put you in a position because we want to unlend to put you at a disadvantage.
Right.
So I'm going to give you a mortgage for 30 years at our rate.
Yeah.
It wouldn't be practical.
Maybe a bridging, and if somebody's...
Maybe a bridging, you need a deposit, and you have in the short term, you have some income coming in.
Yeah.
But
That makes sense. Appreciate that. Chantel Halliday. Yes, Gary, please.
Quick question, just to carry us back to some other stuff. You mentioned about your acquisition and growth strategy. I don't know to the extent that your shareholders have thought about the stock price depending on how you do your transaction. So a while ago when you mentioned that you're raising $1 billion, let's say you pay anywhere from 10 to 12% for that $1 billion. Your average return on your portfolio is probably around 40-something%.
Correct.
Give or take. And so therefore that is accretive to earnings. So you're borrowing at 12, you're lending at 40, you make a 30-point spread. And I think that justifies your PE because you can continue to grow. But on the flip side, if you're doing acquisitions, it is not as straightforward. So, for example, let's say a company like Access, let's say we don't know who Access is.
Yeah.
Depending on who it is, I mean, there are people who feel Access is overvalued. But more importantly, if you try to acquire Access at this current price, which might be overvalued, you would run into a situation where you'd have to raise a combination of debt and equity. And in that instance, your debt is going to be used towards a purchase price, which you're not going to earn as much as if you take the debt alone. And if you look internationally, when an entity acquires, the entity who's acquiring comes under a lot of stress in terms of the acquisition vehicle. Mm-hmm. So, and coupled with that, we are in the midst of rising interest rates. BOG has indicated another increase in interest rates. So you could be put in a position where you saddle the company with significant debt to acquire. That could potentially lead to a reduction in your share price. How are you planning to mitigate, and do you have a valuation that you know that you're not going to pay more than X amount?
Yeah, so
as I said,
I mean, my majority shareholders, they're in the private equity space. The equity is also in the private equity space. I can speak as well as the CEO for Dolla to say that if we're doing an acquisition, whatever company we're acquiring, they must be able to pay for themselves. That's the first rule. So their earnings should be able to service, their current earnings should be able to service whatever debt that we might take on for the acquisition. If they're not able to, then we have to reduce the price that we're offering. So it wouldn't be a deal for us if we're not getting it at a lower price, because we can't work with fundamentally the multiples. It has to make sense in terms of just being able to service the debt that we'll acquire.
So let's give an example, right? Mm-hmm. Let's say hypothetically you acquire Access at 26. It's about $5 billion. Your book value is about $600 million now, right? So to pay for $5 billion, Access is making about 300 something million. That's a return on that investment of about 8%. So in that scenario, it's so different from if you're borrowing money at 12% and lending at 40%, and that's accretive. But in the instance where you're buying something for $5 billion to fund that, right? If it's straight equity, if it's straight debt, it's significant stress on the company.
Right.
If you have to raise equity, you're looking at diluting current shareholders. So is acquisition of certain entities, does it make sense? Why not just continue to just raise debt, invest in your growing a loan book?
That's always our strategy. That's always plan A, organic growth, right? Especially if we're in other regions where we can grow exponentially. We just spread the money across different regions and we grow that way. The key thing, I know you're comparing that company, but the key thing for us is what are we offering? What we're offering has nothing to do with what the share price is. What we're offering has to do with what works in our best interest. So, I mean, if based on your situation...
but your share price, it all comes back to your share price. Mm-hmm. So I hear what you're saying. As I said, if you go down the road and borrow money and increase the book, your share price will continue to increase and it will maintain your PE multiple because you have a high PE multiple because you're growing your profits significantly.
I mean, you're an investment banker, and I'm more of an entrepreneur. So my approach to buying a business is going to be significantly different because you work with multiple, and I'm going to say that this doesn't make any sense for my, you know.
So that's a foolishness, right? So that is fear Twitter people, the entrepreneur versus whatever. We're talking hardcore numbers, right? You're a CEO, you're defending the growth of your stock. And what I'm saying, if you're going after targets that is the acquisition is going to impact your ability to grow the stock, then as a shareholder in Dolla, it's not something I think the company should deal with. So, in other words, $26 don't make sense for you.
Right.
Maybe $14 or $15 makes sense, right? Because use an example of say an Access. Access is technically a mature company. It's not growing at the rate at which Dolla is growing. So one could argue that the PE that they're trading at is significantly overvalued, right? Which is also going to be further impacted by the increase in interest rates and a further reduction in the PE. So if Access comes down to $18, $19, then it might start to make sense.
Okay, so can I ask a question? If yes, so I ask an investment banker question, right?
No, Gary.
All right, Gary. So, and I don't like how you're calling competitors' name, you know, because we don't want you to pressure them, right?
Okay, no competitor, listed company.
Right,
whatever.
Right. Can you offer a listed company to purchase them below their current market price?
Yes.
Okay. So fundamentally, what I'm saying is that if the earnings cannot support whatever debt we might acquire, we're going to make an offer below. It can be significantly below. A stock price can be at $20 and we offer $10 for it because that's what makes sense for us. The shareholders can decide if they want to take it or not. The shareholders can decide that, look, our stock is trading at a multiple that's way higher than market. We're probably a little bit overpriced. We'll take $10 instead of taking the 20. It's always making an offer. If it's accepted, it's not. But we wouldn't put ourselves in a position to do an acquisition that wouldn't work for the company.
I think your shareholders love that answer.
Sounds great. I like it too. So tell me, is it inconceivable that in a year's time that you could think of doing an additional raise? How important is the junior market status compared to, your stock's doing tremendously well, the faith is strong, you can raise money at, I'm just going to make up a figure, at $3 and you see a great opportunity. Do you think it's conceivable that you could do an additional APO because you want to grow the business?
We want to hold value for the shareholders. If we can, a lending business strategically and fundamentally and from the beginning of time is you borrow the money to unlend the money. That's the business model. You're supposed to have leverage. You're supposed to have debt.
Absolutely.
Just like the bank, So we're not afraid to borrow once we're making a margin on the loan. So we will continue to borrow to unlend once the cost of capital is affordable. And you have to understand as well, once you expand into different markets, if you end up in Bahamas, for example, the cost of funding there might be lower than it is in Jamaica. We might be able to raise 10, 20 million US there easier than it is to raise 10 million US in Jamaica. And it might be at 6% or 5%. So that's one of the benefits of being in different markets. You can access capital in their capital markets at lower. So strategically, there's a lot at play.
Okay, and so your preference will be to use debt rather than equity.
Correct.
That makes sense. Okay, let's look back at a couple more questions. I want to tackle at least two more in the 10 minutes we have left. I'll take one from Chester Francis Jackson. Impressive presentation, but pardon my ignorance. Never heard of this company before. The Mayberry Flyers promoting show. What company is he talking about?
No.
So Chester Francis Johnson says, impressive presentation, but pardon my ignorance. I've never heard of this company before. If he means Dolla Financials, and Chester, I don't think you do, but in case you do, it's a company that IPO'd in June. It was the largest IPO for the year. They were trying to raise $500 million, raise $5 billion, and so $5 billion of money certainly knew about them. So I'm not too sure. I'm hoping I'm misunderstanding you. Philip Burgess, given the nature of the business and the need to raise funds often, is it likely that we will see Dolla migrating to the main market at the end of the 10-year journey?
Oh, well, that's a different thing now. Because, I mean, the tax benefit is 25, 30. I mean, you have to remember when you're regulated as well, income tax increased to about 33%.
Yeah.
So if saving 33% adds greater value than, you know, going to the main market, then we'll remain on the junior market.
But to be fair, he did say at the end of your 10-year journey. So
at the end of the 10 years, you
might think about raising more equity at that point in time.
That's 10 years up. It's a decade from now still, you know.
For a youngster like yourself, that sounds way out, does it? Jamaica Insider, we love that answer indeed. Good answer. So folks like the way you responded. No to APO, says Tavares Donaldson and Philip Burgess. Great. And then I think that's pretty much, you know, most of the comments, folks. Really appreciate the comments. It's very active out there in social media land, and I think once King Kadim Mers is involved, I'm not surprised by that. I think I may have had 2 more questions left, if I'm not mistaken. But I think we've covered most of them, folks. I really do think we've covered most of them, and I think it's been a great time. Kadeen, do you have any shout-outs or comments that you want to make in general? I'm sure I'll have one more question up my sleeve.
I'll probably take the question.
You prefer to take the question first? Yep, so $3 billion is on the horizon, I think within the next 6 to 9 months. $400 million of profitability, that's what the market is, you know, calling for. I mean, what's your dream for Dolla in the next 3 to 5 years? You know, how do you view this business as a success? What are you going to be using to judge whether you've done a good job in the next, you know, 3 to 5 years? What's your 3-year objective?
I mean, I just want to create some value for our long-term investors. I'm not the type, I always say this and people find it surprising, that I don't get up and check my stock price.
Okay.
Sometimes it's somebody send it to me,
you
know, because I'm so focused on the work at hand and what needs to be done. And I think that, you know, at the end of the day, I want Dolla to be one of those stocks that are high dividend paying stocks and stocks that people, you know, view as a blue chip stock.
Right.
So that's really my dream for Dolla, where people believe in the brand and its reputation, to the point where they could know that they can buy stocks for their kids. And 10, 15 years from now, when that kid is ready for college, you know, the investment is still solid. So that's actually my dream for what Dolla can be.
Excellent. No, I appreciate it. I think that's impressive. Well, I think with that, I think Gary's all done with questions. And, you know, folks, we missed our chairman today. He was unavoidably absent, but I'm sure he'll be around next time. And, Kadeem, we really appreciate you being here.
I'm happy that it's only Gary alone. Can you imagine? Imagine both of them.
Wow. No, I think you'd be fine. You're great. You're a great guy.
You got the light version.
You got the light version. Excellent.
You did well, Kadeem. You did well. You did well.
Excellent. Well, with that, I'd like to thank our viewers for their usual support, and I'd also like to thank our special guest, Mr. King Kadeem Mers, for joining us for our forum discussions. Be sure to follow us on social media to stay up to date with all things forum related, and don't forget to subscribe to our YouTube channel, Mayberry Investments Limited. Folks, keep safe, and remember, wise investors, slow and steady wins the race. Thanks again, Kadeem. Really appreciate it.
Thanks for having me.
Respect, bro.
All
right, guys.
The Mayberry Investments Limited Virtual Investor Forum has been the standard for investor education in Jamaica for decades, where top financial minds provide comprehensive insight into the market and ideal investment strategies and opportunities for our clients. Celebrating 37 years of excellence in investment banking. The Mayberry Virtual Investor Forum, investing in Jamaica.